Although it might be hazardous, investing in the stock market can be a highly successful method to generate money. Depending on the political and economic climate, in 2023, investing in the stock market can be a wise choice. The advantages and disadvantages of stock market investment in 2023 will be covered in this article, along with some advice for prospective buyers. Before starting, don't forget to like and subscribe to the Financial Tech channel for more future updates. Let's begin, then. Research the stock markets and individual stocks to find potential investments. A wise strategy to earn money is to research stock markets and individual companies to locate possible investments. It's important to have a solid understanding of the stock market before making an investment, since it can be a difficult and scary area to navigate. Investors should consider current economic circumstances and market trends while doing stock market research. This involves keeping an eye on news on the economy, politics, global markets, and corporate performance. To comprehend the state of the market, investors can also investigate numerous stock market indices. Investors should investigate individual stocks in addition to the stock market. To do this, look at the financial records of the business, including the income statements, balance sheets, and cash flows. Investors should also keep up with corporate news, such as updates on new products, financial results, and management changes. Investors should lastly analyze the technical analysis of the stock. This involves looking back at previous data to find trends in the price, volume, and momentum of the stock. Investors may discover whether stocks are in a strong uptrend or downturn using technical analysis, as well as any possible support or resistance levels. Investors might uncover possible investments with a long-term potential return by examining the stock market and specific companies. Investors may locate companies that are presently inexpensive and have growth potential by evaluating market circumstances and patterns. Stocks that are heading in the correct direction and could be ready for a breakout can be found using technical analysis. Investors may select companies with the highest prospective returns by doing comprehensive research. Set a budget for investing in the stock markets and determine your risk tolerance. To make sure you are choosing wisely with your money, setting a budget for stock market trading is crucial. To set an adequate budget for stock market investment, you need first ascertain your level of risk tolerance. Your objectives, timetable, and degree of familiarity with investing all influence your risk tolerance. Consider the kind of return you want and the length of time you are prepared to wait for it. Are you willing to take on high-risk investments with the potential for big rewards, or would you prefer to remain with low-risk investments that provide a more steady return? How much of your budget you should dedicate to stocks will depend on how much risk you can tolerate. You might choose a budget for stock market investment after determining your level of risk tolerance. Being within your limits is always crucial, so you should confirm that the sum you are investing is one with which you are at ease and which you are able to make ends meet. You should never invest more than you can afford to lose. Instead, you should be realistic about how much you can afford to lose if the markets decline. Additionally, it's crucial to keep in mind that stock market investment is not a get-rich-quick strategy. You should have a long-term investing strategy that involves studying equities, comprehending the markets, and diversifying your holdings. Stock market investing is a long-term plan, so don't expect to see returns right away. Having a clear strategy for when to acquire and sell stocks is crucial. Making rash judgments due to emotion is simple to do when the markets are excited. You'll be more likely to remain on track and make wise judgments if you have a strategy that you follow. Consider opening a brokerage account to buy and sell stocks. A fantastic method to begin stock market investing is to open a brokerage account. An individual investor and a registered brokerage business enter into a brokerage account, which enables the investor to purchase and sell stocks, bonds, mutual funds, and other assets. Opening a brokerage account is a very simple process. Selecting an appropriate broker is the first step. Think about the kinds of investments you want to make, the amount of money you expect to invest, and the sort of support and direction you need. Although online brokers are sometimes the most affordable option, you may choose to engage with a full-service broker who can provide specialized advice and direction. You must fill out an application and give some basic personal and financial information after selecting a broker. Additionally, you must decide on the kind of account you want to establish. You must choose whether you want a cash or a margin account for your brokerage account. Brokerage accounts may be individual, single proprietor, or joint, 2 or more proprietors. After your application has been accepted, you must fund your account. You may be able to accomplish this online or by sending a check, depending on your broker. You'll be able to begin buying and selling stocks after your account has been filled. Utilize online research tools to help you make informed decisions. By giving users access to a plethora of information, online research tools may aid in the formation of well-informed conclusions. For instance, consumers may learn how certain subjects are being discussed or search for online by using data-driven research tools like Google Trends. People may better comprehend how issues are evolving by examining historical patterns, which can then guide smarter judgments. Other research methods, including as polls, focus groups, and surveys, may also provide insightful data that can aid in decision-making. Individuals may gather information from a certain set of individuals through surveys and polls in order to learn their thoughts on a given topic. Focus groups provide the chance for a more thorough discussion of a subject, which may help individuals understand the perspectives of various groups of people. People may also use online research resources to locate pertinent information about a subject. For instance, individuals may hunt for knowledge on a certain topic by using search engines to find papers, studies, and other sources. People may utilize this information to assist them in making judgments that are supported by facts. Diversify your portfolio by investing in different stocks from multiple industries. Every portfolio of investments should have diversification. Investors may lower risk and raise the possibility of a larger return on their investments by purchasing many companies in various sectors. It's crucial to take your investment sectors into account while diversifying your portfolio. The amount of risk and return varies among sectors. Investing in healthcare stocks, for instance, may provide larger returns owing to the industry's potential for development, but investing in oil and gas equities may be riskier due to the sector's volatility. Search for companies with solid fundamentals and long-term growth prospects when selecting equities to add to your portfolio. The risk profile of the sector in which you are investing is also crucial to take into account. Consider the many industrial areas, such as cloud computing or artificial intelligence, if you are investing in technology companies, as an example. In order to diversify your portfolio, it's essential to hunt for equities from several nations. In addition to possibly offering a larger choice of options, investing abroad may help disperse the risk associated with investing in a single economic zone. This is it for today's video. What do you think of our video? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.